Scalping futures, return on capital. Been doing a lot of margin related talk today, capital efficiency, leverage, other buzzwords that I can just kind of list here. If you haven't seen it, we had Jamal and Pete Momat talk yesterday about what leverage is in futures and run through definitions and everything like that. I'm going to jump back on with my good friend Jamal Chandler tomorrow to take that to a close here, hopefully get you comfortable with the idea of futures margin. And in the midst here, sandwiched between Pete and Jamal, I'm going to do a little segment on the practical application of futures margin here, talking about scalping futures specifically in the foreign exchange market today, and showing you what the return on capital can be with futures relative to the clunkier, less efficient alternatives in the stock and ETF world. So with that, let me do a little bit of groundwork that you may have seen on the Leap. If you already checked it out, if you haven't, once again, go check out the Leap. It's on the Small Exchange YouTube and Tasty Trade as well. Futures margin is usually less than stock margin for a given market. I have to put the usually in there or else I'll get in trouble with compliance. But I can say for all of our products currently listed at the Small Exchange, it is less than stock margin. Talking about foreign exchange, stock products, gold. What am I missing here? Interest rates. We have very efficient rates between 1 and 50%, but usually on the lower side of that range, even 1 to like 15% when it comes to the capital that's required to trade a product. Now, if you're in the stock and ETF world, that's a pretty flat fee at either 50 or 100%, depending on where you're trading. And maybe this is a novel concept to you. I go to buy gold. I go to buy stocks. I go to buy US dollars in the foreign exchange world. And I just pay 50% of what that thing is priced at. And that doesn't have to be the case if you look into futures here. Futures, the margining system is a function of movement in those individual markets. So yes, it moves around a little bit, but it almost always there, compliance, I'm not getting in trouble, is coming in at a lower rate than that ETF or stock alternative here. And this is a prime example, one that I love to harp on because a lot of people try to dig into foreign exchange, and I applaud them because it's a market ripe with opportunity that is worth digging in. But you go to a product like UUP or FXE, that's the euro, FXB, that's the British pound, and you say to yourself, okay, looks like an ETF, UUP priced around $25, FXE and FXB priced around $100. And I want to buy or sell 100 shares or trade options on those markets. And the price tag is pretty hefty, but it's like, oh, this is the same as Apple stock or Tesla or whatever. Of course, I have to post 50% or 100% or whatever. The problem is foreign exchange markets, they're not less opportunistic, but they are less volatile. They don't have the big swings of a Tesla stock. And so you'll see these returns relative to $1,250 be really, really small, because then you go over to the small US dollar futures from the small exchange, SFX, currently margined at $185 for a product that's almost $15,000, and one that might scare you because you'd say, hey man, that's a big product and I can access it for only a couple $100. This product moves around $40 or $50 per day. We're actually going to get into those numbers. So I mean, what works for you, but I wouldn't necessarily be scared about a product that moves about $40 or $50 per contract. But you see here how much in savings you can make off of choosing the futures alternative versus the ETF alternative from the fact that this product, the small US dollar futures, SFX, is more than 5 times the size of 100 shares of UUP, and you have to pay a fraction of what it costs for 100 shares in that UUP product. Now let's crunch a couple more numbers here and take this to the fruition of today's content, which is return on capital. To get there, I want to talk about the daily movement in these different products. You have in UUP about a 12 cent or a $12 move on 100 shares. And so with this relationship that we just showed, wow, big product, almost $15,000, efficient margin at just under $200. you'd maybe say to yourself that 15 grand product, maybe it's swinging hundreds of dollars per day. It in fact is not. It's actually swinging about 50 bucks per day as of right now. I crunched the numbers last night. And so you're getting a cheaper price tag on access to US dollars. And you're also getting a manageable amount of movement. You're not, you go to some of these futures products that are swinging 500, 1,000, thousands of dollars per day. We don't like that at the small exchange. We like efficiency at a manageable size. And this makes for scalping foreign exchange markets an efficient process here when you're talking about a daily move of 50 bucks, a margin of $185. Some of you probably already crunching the numbers in your head. If I'm scalping, if I'm looking at intraday opportunity, where the market is right now, where it's going to move in the next 30 minutes to a couple of hours, $50 on 185 bucks in margin, that's great. That's manageable. But when you go back to here, $12 on 1,200 bucks in margin, not going to be as nice in the return department. And so you look at here, and it's going to look really, really similar to that UUP ETF chart is this SFX futures. It's small US dollar. Nothing crazy is going on when you're jumping from ETF to futures. It's just a different product that you should get acquainted with and has greater leverage and efficiency. But this is really where I want to end today's discussion. And what I think is very important for active traders out there is how manageable your returns on capital can be when you're looking at getting outside of the stock world, diversifying to foreign exchange here. And say you're looking for just 25 bucks, pretty realistic in both UUP and SFX, a little bit more realistic in SFX, the small exchange US dollar futures. But what's really nice is if I'm a small active trader and I'm looking for a $25 scalp in foreign exchange products like these two here, I could see north of 10% returns relative to just that $25 realistic amount with the lower margin at SFX. If I'm trying to do so in UUP, those returns are closer to 1% there, and it doesn't make for a great long-term solution. Every time I want to take $10, $20, $30 out of foreign exchange trading, I have to post over $1,000 and my returns are very low. Every time I want to do that with the small US dollar futures here, my margin is under 200 bucks and my returns can consistently be, 10 or 20 or even 30%, depending on what kind of management style you have there. And that's similar to your returns most likely in trading the S&P 500 or Tesla or everything else. So I'm glad that people can hopefully get on board with adding foreign exchange to their repertoire. And if they have already, look at these futures products because they make scalping a lot more worthwhile, especially in low vol products like foreign exchange.